If someone invested 10,000 euro in Nvidia back in 2013, today that investment will be worth well over 5 million euro. So why doesn't everyone just buy stock and become rich? Welcome back to Investing 101, where we break down everything you need to know about investing in Ireland in plain English, no finance bro jargon. While an ETF spreads your money across hundreds of different companies at once, a stock is the opposite. You're betting on one single company, which means that everything that happens to that company happens directly to your money. So before you buy a single share, here are 5 things you absolutely need to look at. And I'm using Nvidia as a real example. Very quickly on taxes on individual stock. In Ireland, profits from selling individual stock is subject to capital gain tax at 33%. And every year you have 1,270 euro exemption, which means that the first 1,270 euro of gains are tax-free. This is particularly important if your company gives you shares as part of your compensation package, but we'll cover that in more details in another video. Number 1, what does the company do and what sector is it in? Nvidia makes graphic processors and AI computing hardware. It's a technology company. Now, stock generally falls into 2 types, defensive and cyclical. Defensive stocks sell things that people need regardless of the economy. Think Procter & Gamble or Johnson & Johnson with things like razors, nappies, things that people keep buying whether times are good or bad. Cyclical stock, on the other hand, rise and fall with the broader economic cycle. Nvidia is one of that. 2, how big it is. This is the market cap and it splits into small, mid, large and mega. Nvidia market cap is $4.74 trillion, so it's definitely a mega cap. Generally, the bigger the tier, the steadier the company, but also the less room it has to keep growing at an explosive pace. 3, is it expensive in relation to what it earns? This is called PE ratio. As a rough guide, under 10 or NA often means that the company isn't yet profitable. Above 25, it means that the market is pricing at serious future growth. And as you can see here, Nvidia PE ratio is 29.81. Number 4, does it pay you anything just for holding it? This is the dividend yield. And as you can see here, Nvidia is just 0.14%, basically nothing. And this is because it reinvests profits into growing faster instead of paying shareholders. And number 5, how volatile is it? And as you can see, Nvidia is rated high. But for a cyclical, high-growth mega cap like this is expected. The real question here isn't if it is volatile or not. It's whether you can stomach a 20-30% drop without panic selling. So that 5 million euro number from the start, nobody could have known that in 2013. And also for every Nvidia, there are thousands of stock that went to zero. And this is why individual stock carries more risk than ETFs. If you're going to invest in individual stock, do it with money that you can genuinely afford to lose, understand what you're buying, and never invest based on hype alone. Let me know in the comments if you own any individual stock and follow me so you don't miss the next episode.